This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Day Trading Frank. It's approximately 9:11 p.m. on July 20th, 2020. Welcome. I had some family issues that you all know that I'm dealing with, and medical stuff. And so I was out of my trading desk most of the day. Then I came in later in the afternoon and I put out a few trades. More importantly, it was a pretty awesome day. Why was it an awesome day? Because I would say almost 80 to 90% of the trade alerts that I asked you guys to buy since last week, even since Friday, went through the roof. Okay? And case in point, which we're going to look at, like Zoom. The calls went from $2 to 14. That's a 600% ROI or return on investment on your money, or a seven bagger, as we call it in the business. All right, just one, not to mention other stuff. So, saying all that, let's cover the markets a little bit. And we shall. So you guys have a idea like what's going on. First of all, this is probably the only chart you need to follow between now and the end of the month. That's serious. Two big trading ranges, the green boxes, guided you guys, all of you, before I move further. Full disclosure, this is purely for financial education, not for solicitation or advice. The session will be recorded, uploaded to Clueless Day Trading YouTube channel for further viewing by all members, free trial subscribers, and anyone out there with the internet connection. All your obligation, I only ask only a few simple things, guys, you know how I operate, right? Is to spread the word, to follow us on Instagram. I put out the Zoom alert as well as what the returns were today. You guys need to see those type of charts, those option charts, because I don't have time to show them during the day on my real-time Twitter feed. So people who don't follow me on Instagram as members and who are, enjoying the fruits of my hard labor, I say that's not nice. All right, that's all I got to say. Second, you got to spread the word around, get a lot of followers just to click on the Instagram and say, hey, I'm following Clueless Day Trading. Maybe they'll learn something. They'll learn a lot. All right. Thirdly, which kind of pisses me off a bit, is great alerts put out there. Many of you are taking full advantage of it, but few of you hit like. Why? What's so difficult? Hit like. This feedback is important to me. The feedback is important for my for growing my following on Twitter and Instagram. What is so difficult to hit follow? I just don't get it. So I'm not going to piss on that, but I'm just telling you straight out, guys, start doing it because it's important for content improvement. What does that mean? It simply means, in simple English, that I can improve my content because I can see how many people are liking a certain thing. Okay, they're most probably in that. I can improve the charts. I'm in a constant state of improvement. That's me. I'm in a constant state of learning. I'm in a constant state of improvement. So what is so difficult with all of you guys? And I know exactly who it is because it's social media, right? We know who's clicking like, who's not clicking like, who's follow, who's not following. What's wrong with you guys? Okay, exactly. All right, the least you can do. And so, and fourth, and most importantly, provide referrals. I know many of you have. Let the community grow. Let people make money. Things are pretty hot right now, but things are going to be pretty non-hot, very freezing cold very soon. All right, and then what are you going to do? Try to figure out the market where it's going? No, you won't be able to. Right now, everybody's a freaking genius. I'm not talking about my members. I'm talking overall traders. Okay, everyone's a freaking genius. Oh, I'm buying Zoom. Oh, it's going to go higher. Oh, I'm buying this. It's going to go higher. Oh my God, Amazon. Yes, I'm buying it. It's up 246 points. Yeah, everyone's a freaking genius when markets are hot. And they're all scared shit and turn into complete idiots right when the markets turn cold. Do you guys agree? Do you guys understand what I'm saying?
Absolutely. Yep.
Anyone else like to respond?
100%.
Exactly. So when I ask a question out of politeness, just like when somebody's tutoring somebody, somebody is coaching somebody, when I say please give a response, please give a response. It's called courtesy. That's how I teach my son how to grow up, and that's why he's one of the most polite kids you'll meet, one of the smartest and most polite kids you will meet. All right. So to me, all of you are kids when it comes to training as traders. I don't care if you're 50 years old, if you're 20 years old, but if I ask a question, have the decency to respond. Do you guys agree or not?
I agree.
Yes.
Agreed.
Exactly. Seriously. So get with it. So bottom line is this chart was presented to you guys many, many days ago. This is a significant breakout. We're not going to get into major technicals and stuff because I've explained all that on my real-time Twitter feed and other webinars many, many times, but we will still show it. I told you guys this was a complex head and shoulder, inverse head and shoulder. Look, what is also commonly known as a W formation. There was a trading band. We broke out of the trading band around the 15th, between the 14th and the 15th of July. All right, tax day. Then we stayed within a framework of a sideways action, which was a whole bunch of, which was good for I would say 32, yeah, like roughly about 200 to 300 points on the Dow. Then we broke out today. Now there's a bunch of really important major macroeconomic catalysts that are in play. Quick pop quiz. Does anyone know what are those big macroeconomic catalysts are that are juicing up the market right now, other than stock gamblers?
The Fed are talking about more money, 1 to 3 trillion coming in again.
No, the Fed didn't say that.
Or not the Fed. I'm sorry. The politics.
Exactly. You were right. The politicians. Yes, exactly. The fourth stimulus bill that President Trump has also voted support for. Are you guys listening?
Yep.
Yes.
Okay, listen and learn if you don't know the answers. All right, that's exactly correct, Ed. Massive stimulus, another 2 trillion, another 3 trillion. Somebody else said my link is not working. What the hell's going on?
On Twitter, it's not working, but in your room, it's working.
Oh, okay, I got it. Thank you for that. That's really weird. Twitter's weird these days, Even though the stock went up, I actually made some money on Twitter. And just so you all know, if for some reason link is not working on the real-time RT feed, just sign into the website. One sec. Because Twitter gets hacked a lot, so. Okay, there you go. All right, let me continue with my thought process. They can always listen to it later. So this is a pretty significant development, a major breakout. On a short-term basis, this is huge. And that's why huge money, this is why the stocks are going nuts. Not just biotechs, but actual techs. Can somebody tell me what their biggest loser was today, please? I told you mine, which was TVIXF. Net, I was up. Nicely. What was the biggest loser, guys? Wake up and give me an answer.
That Nikola, what do we call that one?
Nikola.
Yeah.
Nikola. Exactly. Nikola was another one of my short-term losers. Nikola.
YRCY, I think.
Which one?
YRCY, was it you? I think the truck.
I have no idea what YRCY is.
Oh, okay.
What is it?
Some trucking company or something. I don't know. I don't remember. Was it?
I sold it weeks ago. What do you do still sitting on the? Why are you sitting there on the back of the truck? Okay. I mean, the stock will probably work out. Yeah. YRCW. You guys need to shift positions. Don't just sit there. And if that was your biggest loser, that means you had too much money in it. You had a lot of money in it.
No, just one off.
Okay, I got it. YCW I left a while ago. It worked out, it didn't, and I left. Yeah, YRCW, but it's a trucking company. It's going to work. Economy picks up, YRCW is going to go. But it's a very small cap stock, very cheap. So So it's a different story. So all right, anyone else, please?
Yeah, Boeing was down, but the chart looks so good right now. It's so coiled.
Yeah, who's this, Paul?
Yep.
Hey, Paul, I haven't had a chance to talk to you lately, man. It's been so busy. Yeah, Boeing, we're gonna look at the chart too. Boeing is fine. It's just that it's not the stock of the moment that the funds are going into. The funds are going into the techs that got smashed. Amazon was down 10%, 8% last week, 10% last week, and today was up 8%. Okay, Tesla, things like that. So remember, hedge funds are nothing but glorified day traders. All right, except they have hundreds of millions they're trading with, and we have a fraction of that money that we're trading with. We don't move the markets, they move the markets. So saying all that, biotechs are hot, the techs are hot. CTXX, another huge example of a massive winner. Who bought Citrix with me? I kept on telling you guys to buy it last week. Went from $2.40 to almost 10 today, 951.
I did.
Excellent. CTXX, by earnings, I believe they deliver. They're the next generation of online remote software as a service, software on demand, all these terms that they use. Okay, CTXX can actually hit 180. At what do you call? What am I saying? 180. Yeah, 180 to $200. Okay, Citrix Systems, and it's nothing to do with Florida citrus juice. All right, all kidding aside. So this is another major breakout. This is an ascending triangle, and right now, believe it or not, we haven't even come close to breaching. I mean, we just broke out of where we were on the 9th of June. Can you guys believe that? So you got to keep things in perspective. They say, oh my God, the market's really nuts. Okay, we simply went back to the beginning of June, 9th of June, and we broke out of that today. So when you have a breakout like that, what? It's just going to stop? No. It's going to, yeah, it might come back and retest this, but this is significant. It took June 9th, look at the date down here. June 9th, we were here, 3230. And we tried to break that. We failed that on the 15th. And today, a week later, we broke out. This is significant. Now, don't get like, oh my God, yeah, everything's like sweet. No. The market will clobber you. Got to take staggered profits along the way. Yes, if you sell early, don't feel bad. In a runaway bull market on certain sectors, don't feel bad if you take things out early. I feel like crap when I take things out early, but don't feel bad like, oh my God, the other opportunities always there. So think about it. From June 9th to July 20th, how many weeks is that?
6 maybe, 5,
Seven.
6.
So,
Well, somebody give me an answer because I don't feel like calculating.
1.5.
Huh?
1.5 weeks.
What the hell are you talking about? From June 9th to July 21st, how many weeks is that? What do you mean saying 1.5 weeks?
I'm sorry, 5 weeks.
5 weeks, okay. So 5 weeks. So basically 5 weeks, that's a month and a week. And the market finally broke out of this massive technical inverse head and shoulder, so many patterns here, I'm not going to get into it. Rising wedge, all that stuff. So from a technical standpoint, that's extremely bullish, at least for the next couple of days as we get into the end of the month. So let's take a look at, and right after this and one other chart, we're going to look at the other indicators. Paul's favorite, which is the New York Stock Exchange McClellan Oscillator.
hey Frank, can I mention something at this time? Or?
Of course you can, sir. Please go ahead. Of
Yeah, I
course.
just wanted to get your thoughts because there's a lot of people saying, "Oh, it's a melt up," but yeah, like I agree with what you say. Like we're just basically.
Just so you know, it is a meltdown.
Mhm.
Yes, on
At
certain
the same,
area, on a certain area.
yeah. At the same time, though, there's all the ingredients in place. Like I can't help but be ultra bullish here because all the ingredients are here for like a true like runaway melt up because we've got testimony tomorrow in Congress for all the vaccines. And if we break the all-time highs, I got to think $1 trillion or $2 trillion of that money is going to get fierce
By the way,
FOMO.
By the way,
Converse that.
Paul, turn
Yeah.
your volume down a little because what you're saying is
Oh,
extremely important for all members to hear. Paul is a good friend and a terrific, very knowledgeable market trader and investor. So yeah, just turn your volume down a little bit because it's echoing
okay.
a lot. Go ahead.
Is it better now or?
Yeah, it's just the bass is pretty high, so maybe just
Okay, I'm
move
going
the
to just
mic.
move the mic away from my mouth a little bit. Okay.
Yes,
So,
sir.
yeah, so I just think there's, I don't want to get ahead of myself, but this is like, it feels like a once in a lifetime opportunity because of that $5 trillion, or it's not now down to 4.6 trillion in cash, but actually a
Mm-hmm.
lot of it came out of cash and it went to bonds. So like a lot of it didn't even come back to equities. But we've got the testimony tomorrow in Congress for all the vaccine makers. There's like Pfizer and all the big drug companies are going to be
Mm-hmm.
testifying. So we're going to get some good info there. We just started the gap fill, like you said. We could easily zoom to that, and we're very close to the all-time highs. I think if we break all-time highs, we've got a situation where fierce FOMO could hit that 5 trillion in cash and come back, and we could
Now,
just like
let
really.
me just stop you. But a lot of new members, guys, do you know what FOMO means? FOMO is not a
Yeah, of
drink.
course.
Yeah, it's fear of missing out. Okay, it's not a
Mhm.
bubbly drink sitting on a rooftop in New York City. Okay, so FOMO is the fear of missing out. Now, one thing I'll explain before Paul continues. I appreciate Paul contributing his words as he normally does. Is that FOMO is not just a joke. Because if you're a fund manager managing, let's say, $5 billion or $100 million on the small side, or half a billion or 2 billion, and you're not making money and the market is rushing by you, you are in danger of not just losing your bonuses, you're in danger of losing your massive institutional and high net worth retail clients leaving you, which means you're in danger of losing your job. And that is where the fear of missing out comes in. You got it? So
I see.
the mom and pop who are, believe me, like Paul said, there's $5-6 trillion sitting in money markets and sitting in fixed income, which is bonds, giving you nothing. You can buy a 10-year government bond right now, and it's giving you 0.62% a year. I mean, is that a joke? But they are not coming into the market because they're too shit scared. I mean, they're just like, I've explained this many, many times. I don't want to get into it. What's coming into the market is one thing that I read, which somebody asked me, well, why is the market going higher if nobody's really in the market, 6 trillion on the side? And the simple answer is that there is a significant amount of money that's been pushed and traded by hedge funds, institutional funds, and more importantly, foreign buyers. Foreign buyers. Okay? Foreign sovereign hedge funds, which are hundreds of billions of dollars, are buying the US markets like nobody's business because their markets overall are not doing well. Even though the Chinese market has gone through the roof, thanks to the Chinese government. Because they're kind of smart that way. They're like, freaking buy stocks. I don't give a shit. We're going to keep it up. They're like explicit. That's why the Chinese market went off like crazy. And Baba keeps on going up every day like no one's business. And I'm not even there. I'm really not happy with myself, just so you know. Okay? So FOMO is not just a term. It is a term because millions and millions of dollars worth of bonuses of Wall Street professionals, other institutional money managers and stuff is at stake if they don't buy and chase this market and make some money instead of saying, oh, I'm going to short this market. Because on a fundamental basis, the market can be shorted in some cases. But they can't just sit there. And it's the end of the month coming up. And I've explained this before. Paul, please continue.
Yeah, and with the alternative to fixed income, like the yield on the SPY is way higher than bonds too. So just in
Yes.
closing,
And
yeah,
just to explain to you guys what Paul said, if you buy the S&P 500 right now, let's say you have, it's at 32.51 and closed at 84. The yield on that right now on the S&P 500 is what, around like 2.4% or something, 2.2% or somewhere around 2%, right?
yeah, somewhere, yeah,
Somewhere. Versus if you go into the complete safety of a government bond, you're making 0.62%. So what do you think money is going to flow? It's going to flow where it makes more money. Do you guys understand the concept of that?
Yep.
Exactly. Most of you, all of you have to understand why markets are going higher. Paul, please continue.
yeah. So the main point I just wanted to close with is yeah, like by all accounts, we could call this a melt up, but these kind of melt ups are probably more common than not. But I'm talking about there's a chance, I'm not saying it's going to happen, but there's the ingredients there where we could have like a once in a generation type melt up, and everyone should just be prepared for that, by, take your profits, but maybe keep a little bit in just in
Of
case.
course, of course.
Yeah.
And
Yeah.
and yeah, go ahead, finish your thought, then I'll just put in my comments.
Yeah, that's it. That's just that we have all the ingredients that we could like really melt up beyond what
Right.
anybody could expect.
Exactly. And the first melt up is this gap fill that was from last end of February. Okay, that is almost 100 points from here. Almost 100 points. I'm keeping it simple. That's another 600 to 800 points on the Dow just to hit this green line here. That's why you got to focus on my charts. These charts were drawn months ago to show that if the market really goes ballistic, or if the market falls, where you can fall to, where you're going to bounce from. And every one of those levels that I've shown, every one of those levels, and I will certainly take full credit for that. Even though myself, I'm a little bit disappointed in the fact that I am doing well, but I should be doing 5 times better. Because I drew these roadmaps. I'm the one who delivered this. And the market is following these roadmaps. Look how precise this is. This was a massive cup with a handle. It went, it broke the handle, came down, stayed within that, told you guys to buy it because it didn't, I said, okay, there's a red line. We didn't want to cross that. Didn't even come close to it. It touched the bot. This is a cup. This is a handle. After we finish this session, I want you to go to the kitchen and pick up a cup and the handle. Now the handle may be curved. Maybe get a cup with a straight handle. I'm just kidding. All right, seriously. So this is exactly what happened. And every single time the market broke out of that handle, it came back and retested it, bounced up, got up to the next level where it broke down from, which is the next resistance, stayed within this format, these lines. I repeat, for new members, I do not draw these charts after the fact. These are drawn before. So start focusing. Stop making excuses, like I said in my training session on my previous webinar. Stop telling yourself, I don't understand this. I do not want to keep on hearing that. They are quite easy to read. Yes or no, guys? And when I put these charts out, I draw arrows. This is the original chart. But then when I put them up on the Twitter feed, I put arrows. That's as childish as one can get. But then my traders are like my children. So I'm going to try to help them as much as possible. Why do I need to draw an arrow? I still do it. Here's the dotted line. Paul's ultimate favorite and mine too, the Fib 50. So anyway, just look at the visual. Here's your uptrending channel, and it came here, retested it, and then took off. Yes, we had a couple of down days. Now we have broken through this big fat red line, which is a major downtrend line. Rick, do you understand what a downtrend line is? Rick asked you a question. Please answer. Okay, he won't answer. Great. So bottom line is we broke through a major downtrend line. This downtrend line has been formidable resistance as recently as June 9th. New members, focus. Old members, focus. See, I gave up making excuses to myself a long time ago. So all of you should attempt to do the same. Yes, you can have a bad day. Yes, you can have an awesome day. Stay calm on both days. Because we're not doing what we should be doing full blast. I know I'm not, even though I'm putting out amazing friggin' trades. So yes, this is where we're going. And that's another 600 to 700 points. I believe we get there by the end of this month, which is just coming up. In between, can we pull back a little bit? Sure. So this is your daily chart. Focus on it when I show it. Print it off the screen. Compare it with your own chart and move on. Questions? Any questions? And that's going to be the pattern completion is the high of the market. That's why it's called the Fibonacci 1, which is 100% pattern completion. And that is at 33.94. Call it 3,400. That's a lot. That means Amazon 4,000. Mind-boggling, but
That's
that's the way.
fantastic. Hey, Frank, what about when we get up there end of the month? What do you think about the pullback? What are you thinking about the line, the bottom of your channel? What is that, 3142 area? What do you think about that?
Okay, if we go up here and we drop, just do a quick math here. Everyone, by the way, go to Dollar General, the dollar store, and buy a $1 calculator. So when I ask you to calculate something, you can do it real fast, all right? I'm dead serious. My $1 calculator served me well over the last many, many years. So let's say, for example, like Ed asked, like we hit this level here, 33.23, okay? And you get a massive pullback down to retest the downtrend line, which is 31.55. That's 168 points. Are you guys following us so far? From here to here is 168 points on the E-minis. Are you guys with us?
Yeah.
Yes.
And Rick, I asked you a question.
Yeah, I had to
Answer.
reboot. I had to reboot my computer. My mic was off, and I had to log off and in.
No problem, man. Because you're new. I want to have you understand. So you understand. I explained about this downtrend line being broken. That's pretty.
Yes.
By the way, you gotta fix your mic, man. Everybody, spend 20, 30 bucks. Get a nice Logitech mic, so I don't have to hear feedback coming from dogs, cats, kids, like everything. All right, please, because it's very distracting. No offense meant to anybody. So 168 points once we get here. So 168 times, let's say 7. That's the factor, as in how many points we can drop on the Dow. For new members, one S&P point, SP point is roughly about 6 to 8. Let's call it the 7 Dow Jones Industrial Average point. So that simply means that if the S&P 500 goes up 10 points, that means the Dow Jones will be up 70 points. All right? And so please write that down somewhere, because I don't want to keep on repeating. These things you should know like the back of your head. So 168 points is roughly 1,200 points on the Dow, equals 1,200 points on the Dow. Now, can we drop 1,200 points from here to here? Answer to Ed's question, absolutely. We can do that in 2 days. Have we not done it like that just recently at the end of June? And this, where we were down 2,000 points? Absolutely. So that would be a technical sell-off. Will it happen in 1 day? I have no idea. But that would be a logical thing to do, because things would be so overbought on a technical basis. People would be too greedy. And I think from an emotional standpoint, that the market will come in and the big boys will pull it down and take all their profits away, steal all their profits away. That's why staggered profits is very important. That's why I am net long with a negative loss position on TVIXY F, and it's no problem with me, because that's my insurance policy. Are you guys with me so far? Did you understand what I said?
Yep.
Yes.
Yes.
Okay.
Yeah.
Good. Now, I'm not even showing internals or anything. I'm just showing the externals, the charts. Now, let's move on. We looked at the daily, but in the meantime, this is the chart that as traders, we need to follow, because this is the one that shows us, okay, are we going to pull down? Like, are we going to totally break down? And this one. I repeat again for new traders, stop telling yourself you don't understand charts. These charts are very simple to understand. This tells you what the roadmap is, where we can come down, where we can bounce from. That's the kind of positive thinking I need from my traders, from my people, all right? Okay, now let's talk stocks. How about that, guys? No, actually, let's look at where we are from a technical standpoint. How overbought are we? So let's start off with this. which is known as the S&P 533. My advanced coaching session students know exactly what it is, so I'm not going to get into detail. I'm simply going to set it up and just give you guys an idea where this is called a predictive roadmap. I put out a link for a service called BPT, Breakpoint Trades. Excellent people, good people. I, in fact, was a member of that many, many years ago. Listen to that thing, listen to their recording, and listen to how I explain things. And then you come and tell me whether you're going to be the baller that you want to be in trading, or you just want to be another like explainer of charts. Exactly. With all due respect to them, they're good people. Where's my pivots? Because we predict, and prediction is a dangerous game, but that's where the big money's made. Do you guys agree that by the time everybody knows everything, is there money to be made?
No, too
Nope.
late.
Exactly. That's why I tend to buy extreme critical oversold levels as long as the technicals are saying, okay, there's a probability that it might go higher, instead of just chasing things, which everybody is right now. There's nothing wrong with it. I chase stocks which are going higher. But in general, the biggest money is made when 99% of newsletters, traders, Wall Street guys, the media is just simply saying the world is ending. And that's the biggest example of that is my good friend Paul, who made so shitloads of money. It's not even funny. When I said back in March when we collapsed and I showed all those serious indicators and I said, you know what? This market is going to rip the heads off on that reflex bounce. And he went in hard. And I'm sure some of you others did too. Now he's got so much profits to play with. Doesn't matter. Remember, human beings are like lemmings. They like to follow the Pied Piper till it falls over the cliff, okay? We all like to follow somebody. Like, oh my God, you know? So follow the herd. Human beings are basically sheep. Very few traders are lions. It's a fact. You like to tell yourself you're a lion, prove yourself in this world of trading. Believe me when I tell you. This business will teach you more about your character than you will ever find out by doing other stuff. Believe me when I tell you. It'll make you cry. It'll make you very happy, but it'll make you cry. And when you're crying and you look at those charts, that's when you buy. And one of those days are coming. Believe me when I tell you. And don't be scared to cry. Cry. And then buy. Because within a week or a couple of days, you're going to be like, yeah, bang. Frank, you're the greatest. Well, who gives a shit if I'm the greatest or not? I am not, of course. But you guys will learn. You guys will learn. All right. So saying all that, this chart is telling us higher. Now, is it saying a lot higher? No, because at this point, look at this. We are getting very severely overbought. That's why I'm saying the markets can still run till the end of the month. What is the last trading day of the month? The last trading day of the month, ladies and gentlemen, is the 31st of July. I would say sometime by next Wednesday, Thursday, need to put out some nice shorts out there. Okay, that's it. It's my prediction. So basically, everything else is good. And I don't want to like overanalyze this chart right now. Everything else looks good. Now let's take a look at the weekly chart. Now the weekly chart is like cruising along nicely with the RSI, relative strength index, at 90. That's pretty damn good. But by the time the relative strength index gets to 97 or so, generally speaking, the markets will have a technical pullback. What is a technical pullback? It simply means things got a little too hot and heavy and profit takers, big shot profit takers came in. It doesn't mean the markets can't go higher. It simply means it's a nice shower after a very hot day. All right? Exactly. So looking at the weekly chart, oh Lord. I mean, I got to actually move this back. I actually haven't seen this in That's better. Wow. See this thing here? How it's moving? These lines? Forget you know anything about technical analysis. Just look at this. These lines moving like that. Xfinity, get out of my face. Okay. Sorry. This is a public site, so that's why you have the ads and stuff here. So this is serious. This was the calamity when I said the markets will recover. This was when the world fell apart and we fell 4 to 5,000 points in a matter of weeks during the coronavirus crisis. And this is where we are right now. So as a simple way of looking at it from a standpoint of a pattern, your favorite cup, your favorite handle. And this is the same chart that I drew like this and showed it to you guys just a few minutes ago. Upper end of the thing is a new high on the market, 3,500. 3,500. It's a lot. That's 250 points from here. And not the old members. I just said, what is 250 S&P points if you convert it into Dow Jones Industrial Average points? Please. I just gave you the conversion factor just a few minutes ago.
1,700.
1,700. Correct. Rick, did you get that?
Yeah, I did. I got 1750.
Rick gets the A plus. It's 1,750 exactly. So that's 1,750 points from here. So let's add that up. So from here to here, because look at this picture like very quickly. If it's a technical cup and handle with an upwardly rising, it's like this, right? Which is certainly a bull flag. So my question is, why can't it get to the top before it pulls back? So that is your 1,750 Dow points. Now, if we add where we are today, 26,680 plus 1,750, my friends, we arrive at 28,000. And remember, when I do these videos, I don't delete it. So anyone says, man, you're talking a lot of crap. Look what happened. I said, oh man, but most of the times I'm right. Most of the times I'm right. That's serious. But that being right doesn't matter. We have to act on it. That's what I keep on telling myself. I can be so right with these beautiful charts and the structure and stuff, but I got to make money through that whole move. I mean, real big money through that move. I haven't reached that point yet. I've done very well, but like really like seriously out of control type of things on a trade that I put out like Tesla and stuff, because we are always I'm too disciplined. I take profits along the way. I'll move back, sit out a day or two, and then miss out on a day like Amazon and Tesla today. I'm like, I am such a goddamn idiot. Did anyone play Amazon or Tesla today?
No.
Okay. Remember one thing, and just this is for new members and old members. Don't always rely on me, okay? I put out charts. I'm putting it. Go with your own instinct, like House does so many times. House, you here? My friend House, So, and many other members do. Use your own gut instincts. Use my charts and stuff as very effective tool. Look, I had some serious family issues. Okay, my mother-in-law's not well. So anyway, I don't want to get into it. So bottom line is, I had to take care of that. I would have loved to set up my trading desk and just like bang, bang, bang. But then the stocks that I gave you guys last week, just to name two, Shopify and Zoom, just to name two, not to mention ABMD and AYX and Regeneron and all those other ones, not to mention the small ones that go through the roof. Obviously I couldn't do it because I was tied up. So go with your gut instincts. You feel better. That's how you get independent. And use my service as a tool, as a resourceful tool, because I'm pretty damn good at predictive analytics on the overall market. So 28,430. Can we get to 28,430 by the end of the month? That might be a little bit of a stretch. I don't know. We can, maybe. I would say that we get there, I don't know, after the initial, pullback in the early part of August, we could get there. Why not? And that would be a new high on the market, 3,500, like Paul was explaining. Did you guys understand everything I said?
I do.
Okay, sounds good. All right. enough of the big talk about the markets and stuff. Oh, one other chart that I need to show. What am I doing? Which is how technically overbought is the market, known as the NIMO, which is a New York Stock Exchange. Actually, I can do it right here. One of my PCs went in for a major modification because Best Buy, my guy, is finally back. So it's going in for like a more powerful NVIDIA cards and stuff. And with the market so crazy and all my posting and everything I have to do for you guys, I have to upgrade that seriously. And my machines are pretty strong anyway. They're running on 24 to 32 gigs of RAM, you know, i7, you know, Pentium, all that stuff. But I got to improve the graphics cards because I'm doing all charts all the time. And the new NVIDIA cards, even and the AMD processors are really seriously strong. So I'm running off half my screens now. What do I have? 3, 2, 5. I'm running off 7 screens.
Thank you.
So basically, that's why I felt a little lost. I'm like, where are my other screens? Like, oh my God, what am I going to do? I'm like, stop being stupid. You can work off one screen if you want. All right, so let's do this. Let's clean this up. This is a very interesting chart, where especially new members. Bingo. And then we set up the parameters. And I teach all this stuff for people who want to do it on the advanced coaching session. So these are great tools. Okay. What I have the simple moving average pivot and Bollinger. This is how you take a naked chart and you dress it into and you structure it into a roadmap so it makes sense to what it's doing. Full stochastic. Let's change the color. And forgot the biggest thing. It's not candlesticks, it's the area. Update. Wow, look at this. So this is telling us short-term, the NIMO, the New York McClellan Oscillator. Remember, I told all you guys, especially the new members, want to know exactly definitions of these things? Don't ask me to sit there and explain to you for the next 15 minutes. Go to Investopedia, put in the thing, learn what this oscillator means. Simply means if things are getting too hot, too cold. Okay? Too happy, too sad. Technical happiness, technical sadness. All right? Not like, you know. So basically at this point, what I can see here, the upper Bollinger on this thing is telling me that we are, and this I'm sticking with, that even though the markets can go higher on a short-term basis, we are quite overbought. And that is being shown here. Look at this green line. That's your Bollinger Band. When you get really oversold, like -70, like it happened in March, which is a generational opportunity, as Paul mentioned, I believe the generational opportunity has already passed. Right now, we're in Elliott Wave 5, which simply means the last leg of the major move up. Okay? Yes, it is a generational opportunity too, because the markets can blow higher, but the real generational opportunity was to put a whatever, getting a second mortgage on the house, half kidding, but whatever, somebody should take it seriously, and buying the market at around that period, and then selling the market 2 months later where you could have bought it $10 million mansion. Okay, that to me was a generational thing. Right now, yes, there are still opportunities, but not like it was back at the end of March when nobody wanted to buy stocks or even look at the market. Why do you think so many members sometimes join? Because they get excited, like, ooh, look at the market. It goes up every day. I know how people's minds work. You think new members would be coming in if the markets were down 5,000 points right now? No, but that would be the time to buy it. Yes or no? Yes or no?
Yes.
Exactly.
Yes.
Because as humans, we're like little babies. You know, it's so the lollipop, right? So now the market's showing you the lollipop. Like, oh, look at that, Amazon, 246 up, man, we gotta get in the market. No, the real time to really get in the market was when we were down 5,000 points and there were no lollipops in sight.
Except Frank,
Go
Yeah,
ahead.
I agree with you. The only difference though is we never had 5 trillion in cash before. That's
I
unprecedented.
listen, Paul. I am with you on all that stuff. But even on
Yeah.
a technical basis, whether it's 5 trillion or not, that 5 trillion might not ever come back in the market. Believe me when I tell you.
I think the sheep
FOMO,
are too emotional. It can come back real quick.
FOMO or no FOMO, at 5 trillion, maybe a trillion comes back. That'll take us to 3,500, and that's be 500. What I'm trying to explain to the new members primarily is that the emotional fact is when you are completely shit scared. But at the same time, I will agree with Paul that as the markets develop and we see some light at the end of the tunnel with the vaccines, with improving economy, with so much money coming into the from the federal government as well, Federal Reserve and the U.S. government working hand in hand. And we have another major development coming this week where our Treasury Secretary Mnuchin is meeting the opposition party, Pelosi and Schumer, to hammer out the deal for the fourth stimulus bill. Yeah, that's all good. I'm just simply saying when things are at their all-time cheapest. That's what I was saying. Okay?
Yeah,
And,
yeah.
and,
Nobody knows the timing, like you say. Nobody. They could do
yeah,
a rug pull before it goes up.
exactly. I'm just simply saying that always I'm biased long, but I am not willing to go nuts on putting in the amount of money that I did here at this point here. And that's
Right.
just me. That's just me. I know. And if I'm going to miss out on a couple of trades, that's fine with me, baby. You know, because I'm a very disciplined trader. I've been in this business long enough to know when people are a little too giddy and happy and they're making too many profits, the markets, it never ends well for a short time. A 2,000 point drop in the market can happen within 48 hours. Do you want to give everything back to them because you went nuts on the market at this point? No. Can you be selective on stocks that we're going to look at in a minute? Absolutely. Right now, one of our stocks is going through the roof. CLGN, told you guys to buy it at like 2 and change, and CLGN right now is closing into, I'm sorry, 3 and change, and CLGN right now is closing. One second. I'll show it to you. I think I put the wrong symbol in. It's almost a double right now. Okay? Those are the things I want to play and without going like all hog wild and say, let me put all my cash in the market. No. Keep a lot of cash on the side and take staggered profits. That's my opinion. Do what you guys want to do. All right, next topic. So bottom line is this chart is telling me this is good. So I'm just going to mark it out. I just look at the different indicators without explaining everything that is. This is, oops, sorry.
Frank, just one last thing. Do you mind looking at the weekly? It looked a little bit better to me than.
Let me finish with the daily,
Yeah,
then I'll look at the
yeah.
weekly. Yeah, absolutely, I will. Okay, this is good. This is not good. The daily is telling me that the thing is starting to, things are getting a little bit overbought. So it doesn't mean it has to come all the way down here. No. So this is basically I'm putting in the negative camp. This one is kind of mixed. We have the Bollinger here. We have a Bollinger here. New members, you don't have to worry about understanding all this stuff, but just I'm explaining to you very simply. So bottom line is this is also showing me some negative divergence. That means it might come down a little bit more, come down a little bit. Now, all this, like I said, end of the month, in my opinion. So, but if this starts to come down, the full store starts to come down, you can rest assured we're going to get a 500. Well, we get that quite often anyway. It doesn't matter. A 5 to 600, 700 point move down on the Dow, real easy. So let's not be surprised with that because we get that happen. We see that happen every week, don't we, guys? Like markets open down 600, things get really blasted, and then slowly, even on those days, many stocks are up. But generally speaking, look at last week when they were killing the techs, right? So that's just the way it goes. Now, the weekly chart on this is very, very, in my opinion, not very, very, but I would give it a strong bullish mark. So saying all that, right there, this is very nice. It is just starting to come off the bottom, double bottoms. We love that. This is very nice. And the upper end of the Bollinger, for a lot of new members, do you see the difference? How this chart changed when you look at it on a longer term perspective on the weekly, instead of when we're looking at it, what is going to happen over the next, let's say, week or so. This is what will happen over the next couple of weeks, next couple of months. You see how the chart changed? The upper Bollinger now is at 112. This is very good. This is good. And this is good. So the weekly charts are telling us in simple English that the market has much more room to move. And I think my original projection that we go to, and like Paul agrees with, it said himself that we can make a new high on the US stock markets. Now, saying all that, don't get happy. Always be vigilant. All right, are we done with the stock market stuff? Yes? Okay.
Yeah.
Now, let me let's go into some stock stuff. So this chart is an ugly chart. This is your insurance policy, which is basically saying right now that there is a level of like, oh, markets are going to go higher, so the VIX is going to go lower type of thing. Nothing wrong with that. I'm down on this trade. I'm going to keep on scaling in. Remember, just the way I dollar cost average when an option, like, for example, when we bought Zoom, it first went up. It went up to like 6, and then it came, and then I had a little bit left, and it went down to 2. I bought a bunch more, and today it went to 14. That's called dollar cost averaging, all right? That's called dollar cost averaging. That takes technical expertise. That takes some balls. Oops, I'm sorry. So like soccer balls, okay. And that takes an element of risk. It's the same thing on the other side with TVXY. All right, which is basically the VIX 3 times over. So technically speaking, the TVXY, believe it or not, technically speaking, can go to 80. Can go to 80. And I can assure you, I will be buying the crap out of it. All right. If it goes to 38, where it was back on February, before the markets hit, before the markets hit the coronavirus 5,000 point drop, I can assure you I'll be buying. Now, that's me. Now, if somebody wants to, technically the start looks like it wants to go to about 70 to 80, another 10 points. If you can't deal with that, don't buy this insurance policy. I dollar cost average from 5 to 2, and then it goes to 13. Just give you an example on the Zoom 160 calls. So why can't I dollar cost average on my insurance policy while staying long on multiple trades? That's how you become a trader. This is not a one-way game, all right? This is not a drinking, what's it called? What's that stupid thing, like pong, like beer pong? Like, I never understood like that stupid beer pong crap, You want to drink, like shoot down a couple of nice, scotches, like beer pong. Okay, let's throw a ping pong in a beer thing, all right? So this is not a beer pong game, guys, all right? All right, I hope you guys understood what I said about the VIX. Now let's take a look at the VIX on a shorter term basis, which is the 1 hour chart. And I can assure you the VIX wants to bounce a bit. This is the 1 hour chart. Every single technical on the VIX on the 1 hour chart is extreme oversold. You can rest assured that Wednesday will be a down day. If I'm wrong, okay, whoopee, I'm a little bit wrong. Are you guys with me so far?
Yep.
Yes.
Good.
Yes.
So the TVIX can go from 90 to 109, blink of an eye. We have done that many times. TVIX on last Friday was here. Last Friday closed at closed right here, 110. And Monday morning, you could have sold it at 137 by Tuesday. Hello. Rocket science? No. Just the way things work. Remember, it's a derivative. That means it doesn't move like a stock. It's got like multiple movements based on the VIX, the volatility index. The VIX today closed at 24.5, less. I wish I could show you the other chart, but I can't drag it from on the screen right now, which is my VIX chart. Somewhere between 20, 25, you can rest assured the market on a technical basis, on a short-term basis, is severely overbought. VIX between 20 and 25. What does that mean, simple English? Boom, pullback time. Would that be a multi-day pullback? No, it could be 1 or 2 days, multi-week pullback. No, I don't think so. So, but look at this chart here. If you want to be a trader and say, okay, then then you could buy this here, put a stop loss if you want at 80, and in my opinion, you can sell it at 98 to 100 to 105 real quick. Any questions on this very quickly? No? No questions? Okay. Look at the VIX here. This is what you call a complete meltdown. Not a melt up, a meltdown. The VIX took off, listen carefully, on the 24th of February. Actually, on the 20th of February. The VIX was at 17. Guys, can you see? Let me just highlight. This is a very important thing that I'm going to show you guys. Everything moves in mathematical patterns. The VIX on the 20th of February, when the market was at its peak or so, was approximately around 17. Do you guys see this?
Yeah.
And I highly suggest that when I'm doing this, you can pull it up on your other computer and do it yourself. Type in the VIX. Which reminds me, Rick, did you download the app for Thinkorswim so you can actually get a chart?
Yeah, I did. I'm looking at it right now as you're doing that.
You're the best, man. That's the best thing. Awesome. I love it. It's a whole different world, man. Okay. So anyway, so basically 17. So then we popped up on the 23rd. And then the VIX went wild. This was beyond girls gone wild. This is hogs gone wild. This is like whatever one went wild. All right. And then the market crashed 5,000 points. The VIX went to 85. This happens only once every 5 years or so. Believe me. It was sick. Like, what? Not every day, but, pretty much over the next, culminating into a massive print of 85. 85 means fear. It's like terror. Like, you're walking on the street and you're seeing like these birds attacking you, like what's going on? You see colors. You're like hallucinating. Like, oh my God, the stock market, it's over. That's fear at its height. 85? That's when we came in. Well, didn't just come in. We were trading in between. I was scared too. I mean, it is like serious shit, okay? The virus thing was so new. And then we looked at the charts and stuff. Okay, let's go selectively long, and worked out. I didn't know the market was going to come back all the way here, but I kept on walking people throughout the whole process. That's what a technical trader does. A technical trader doesn't just look at one thing from day one and says, okay, 3 months later, he's going to be up here. No, that's bullshit. He evaluates the situation as he moves along, and that's my job. Let me do my job. You guys just have to understand the charts that I put across. That's all. So basically, went to 85. Now we are back to where are we? We are almost going to kiss that mark here, which is, one sec. This gap fill. Remember, gaps get filled. Rule 2116. That's the upper gap. The lower gap is, and believe me, this is technical magic. You're going to see. Same thing, same crap's going to happen. The lower gap is 1573. I do not think VIX is going to go to 15 unless we get a massive cure for the vaccine and all of a sudden it's no longer there. Yes, in that case, the VIX goes to 15. Oh, then the market's going to go to frigging, it'll be up like 5,000 points. We'll go to 30,000 on the Dow. No problem. But barring that scenario, the VIX goes to 21, closes this gap. Money down, obviously money down, I'm a trader. The VIX is going to bounce, and it's going to bounce up towards 30, or at least towards 29. Because at this point, we are so severely oversold, but we still have a little bit more room to go, just so you guys understand. But do you see the pattern I'm looking at? This is where the terror started. The massacre, the genocide of the stock market, the bulls getting slaughtered. And the bear's like, yes, we're gonna just eat everything our way. So we're almost getting there. There's another line here, which is 23. So we're close to it. That's all I'm saying. Now, the chart itself is technically crappy. So we can break below 20. So stay long, but keep on watching these other signs. Now, on a short-term basis, the VIX is quite oversold, and I believe that we can bounce. If we can bounce 26, 27, that means 300-point pullbacks, no problem. Okay, are you guys with me so far?
Yes. we are.
Yes.
Okay, so let's look at a couple of quick stocks. I was never a guy who played a lot of small stocks. So, yeah, because I'm not into penny stocks, I'm not into small. But over the years, I've learned the trade. You know, I'm really getting better. I'm getting better. Like this year, I got really pretty damn good at trading these small stocks. All right, told you guys to buy this baby all the way here, not Monday, like for a couple of, like almost 2 weeks, or at least week to 10 days, like last Monday. Bought the stock at 4. The stock is almost 50+% higher to 575 right now, closing into 6. Does this chart look pretty damn good? Yes, it does. And the reason why we're in this stock is I played it once before, and the stock went from $4 to 7.5. You're talking 2 days. QLGN. Let's take a look at SRNE. And I'm going to look at the daily chart. Sorrento. Damn good looking chart. First time we played it, we didn't buy at 273. I bought it around like 433 because I don't monitor these stocks, right? I don't have to like scan these small cap things. So I look at it when they're up and I say, okay, are they down a little bit? Let me get in. So I'm always a little bit late, but then it works out. I'm never like right at the bottom. Yeah, very seldom. Some of them I have been, just so you guys know, okay? Because I'm not a small cap newsletter or anything like that. So, and there's a lot of guys on Stock Twits and other places, you know, who follow these stocks and they're damn good. So bottom line is this stock literally goes from $3 to 10. 2 days. Overnight. We kept on buying it. We kept on buying it. We bought it as low as 4. Sorrento. Bang. Goes to 846. Right now, it hit 9. Here. It hit 9 this morning. Pull back. And right now is at 865. Let's look at the weekly chart. I like it. I think the stock can go to 10. I think it can go a lot higher because these guys they just got FDA approval for the second COVID clinical trials, and they got some shit going. All right, I like it. Another one. Talk about small caps. Blink. I like it. There's absolutely nothing wrong in this weekly chart, even though the stock hit 842 2 days ago. I'm sorry, 2 weeks ago. We're there, and then it pulled back to 5, and now it's at 632. But from a technical perspective, nothing wrong. Now, can somebody tell me what is significant about this line, and this? And what is this pattern? Quick, guys. Let's do it. What is this pattern?
Bull flag.
It's a bull flag. Exactly. Who's that? Mr. Fung?
Declining volume.
I can't hear you. You're muffled too. Get a freaking good microphone. Who is that? Ed?
Simon. The volume is declining.
Simon. Yes. Very simple. This is a bull flag. And smart traders, smart investors, in my opinion, the ones who are not looking, who are not crying every day just because their P&L's down on a certain day, want to accumulate. Only then do you get that big fat reward on your money when it goes berserk and goes to 15. You don't make like that serious money which makes you cry. It's God actually loves me. Okay? If you buy it at 12 and it goes to 15, yeah, whoopee, that's exciting. How about positioning yourself down here, which I wasn't there. I didn't even know this company at that time. I did some homework on this company. I like it. Blink Superchargers. You guys should check it. Okay? When you're in at 6 and it goes to 15, So to me, as Simon says, one second, because as the markets keep on melting up, I want to keep things a little bit simple. I don't want to go too crazy on too many things, and even if I'm missing a couple of trades, I don't care. It's up to you. All right. Look at this volume. The big boys bought I mean, this is sick. 125 million shares. The big boys, the small boys, us, like, you know, boom. So it went up like this, and now it's doing this. It's attacking the yellow line, which is the 5-week moving average. And which way is the 5-week moving average going? This way. Pretty obvious. Look at the volume, like Simon says. The red volume on these 2 down days, 2 down weeks, slightly from the highs. The blink was up big time the other day. Does anyone see the red volume? And somebody else answer. Is the red volume really alarming, or is it like, so what?
So what?
Yeah, it's a so what. Now, if the red volume picks up like that, I'll be like, hold on a minute, something else is going on. This is nothing. This is just pure profit taking as technical traders, and not just technical traders, anybody, you know, just like freaking out a little bit. Oh my, I'm getting out of town. I like this. Do I think it can go to 15? I think the friggin' thing gets bought out. That's my opinion, you know? What's the other one that we like? Sono. What's happening with Sono? When is Amazon buying Sono? Is there anything wrong with this picture on the day, on the weekly? Like somebody just find a fault with this chart. Nobody. And the weekly chart on the pattern completion goes to 24. My opinion, it's going close to 24. And do you know what your friggin' calls will be worth? Most of you have never made real money in the market. I mean, real money. So you don't know what it feels like. Well, start doing it. Don't expect it like in 1 day or 2 days. Yeah, it can happen. You catch one of those trades and it goes through the roof and it goes from 5 to 23. Sure, but that's gambling. And that's okay with me as long as you make money. But real money's made when you use technical discipline, emotional discipline, keep on buying things, looking at the charts, sticking with a good company, and it goes. Real money is not like, oh, like I said, everybody's a freaking genius when the markets are going higher. And nobody's around when the markets crash 5,000 points. And believe me, most of you are like that. Some of you maybe are not like that. Maybe you guys have more technical discipline and courage than I do. But most of you are the same. You're human. And humans are triggered to grab diapers and cry when things are hard and get a little too happy when things are good. But a real technical, disciplined trader stays calm throughout the whole thing because he or she knows they haven't reached their full potential. Just listen to the words I say, okay? Trust me. And that'll help you in your life too to make yourself a better human being. So this chart, fantastic. Nothing wrong with it. What's the daily look like? Hello? It's just about to frigging rip the head out of say 18 bucks, and that itself you can take some fat profits off the table. Here's another stock that is slightly down over the last 2 days. Okay? WIMI. When I told you guys to buy it, the stock went to $29 from about 15 or 16. Now it's pulling back. I did some homework on the company. I really like it. 5G broadband, holographics thing. I mean, this is serious stuff. So the stock now is here. Look at the volume. Non-existent. Look at the volume when they were buying it. Look at the volume now. Check this company out. Look at the internal, the stochastics. Fine with me. It's got a nice crossover. There's nothing wrong on the longer term picture. Short term, yes. There's some dumpage going on. 1 hour chart, love it. These are the kind of companies you can wake up in the morning. I have many times. And by 7, 8 o'clock, you can just on your iPhone, you're like, tick, tick. You got a couple of hundred shares, you got a couple of thousand shares. You're like, Whoa, got it at 4. Now it's at 7. Boom. Sell it right before the market opens. Any of you have done pre-market or after hours trading? On obviously common stocks, you can do options, you know, pre-market or after hours. Have you guys ever sold stock pre-market or after hours?
Yeah, I
Yeah.
have.
Good, get used to it. On these small stocks, you got to do it. Because when they pop up like that 8 in the morning, you're like, yes. Well, when you say yes, hit that sell button. It's not a day, and just, you know, you guys know how to do it. You just put EXT instead of day. It should EXT because it's pre-market or after hours till 8 p.m. I teach all this stuff on the advanced coaching session. So, hey. So the 1 hour chart looks pretty damn good to me. It could easily pop up to 20 on one piece of news. This is a 5G major player, not on the chip side, but on the what do you call holographic face recognition and all that stuff. Serious stuff. ABMD gave it to you guys on a silver platter. Did anyone buy it, sell it, make some money?
Yep, I own it.
I knew it. Told you it's a falling wedge breakout all the way down here. Just told you on the webinar on Wednesday. Buy the crap. Now it's broken out. Now the stock, technically speaking, is going to go to 330. So I shifted out the calls to the 330 ones. Can anyone find fault with this chart, please? Can anyone find fault with this chart? Technically, beautiful. Now, I don't want to hear. I don't like using the word perfect because there is no perfect in life. It's always like, you know, in the middle. But it's as technically solid as you can get. Any reason why somebody doesn't buy it? I don't understand it. I told you guys to buy the calls at 3, 4, 5. They went to 17 or 18. Then the other ones, which are the 300s, went from 12 to 15. And this chart right now that it's broken out over this level, major, you guys see the range? You guys see this range here? How it's breaking out?
Yeah.
Yes.
Look at that. Oh, I gotta get this pen. Hold on. There. Here's where they slammed it. Big slam. Slam-o job. Big money was lost. Don't know. Weren't there. Okay? So that was last August, long time ago. We got into the stock around here. We stepped a little bit. I said buy, and then right here. So now that it's breaking out over this major supply zone where they got slammed, the next level is around 340. It's a swing trade. Other one that I got into today, told you guys to get into. We played this before. I don't know why I didn't get into it earlier. Is a coronavirus play, ALT. Don't forget, markets are doing well, economies, you know, all that stimulus, but coronavirus cases are rising rapidly in certain states. Rapidly. Right? Exactly. So this is a serious chart. And on a technical basis, 33, 23, that's 10 points. Add 33 to 23, it's going to 45 or 43. Why not play it? Why not play it? Regeneron. I've said it from all the way down. The stock's going to $700. I don't like the way the options don't move fast enough. I actually, it's very annoying. And when you try to buy it, it's got a $5 spread in the middle. You know what I'm talking about? But look at this chart. The stock is going to go to 710. All right, it's 10:25. It's already an hour and a half. I don't want to push it. Throw me a quick chart or two so we can take a look at it. Let's take a look at Tesla. They're coming out on Wednesday. Technically speaking, the stock is going to go to $1,800. That's a technical. I mean, seriously. All right. Now you try to buy the 1,800 calls. I can bet your butt that it's going to cost you an arm, a leg, a tooth, a toe, like everything. They're super expensive. So what's one way to play it? Buy a couple of shares. Or buy some calls all the way out, like the 2,000 plus. Because right now, the calls on Tesla for the 1,800 calls expiring, let's say, next week. Somebody better look it up on the screen as I'm looking it up. Holy shit. This is sick. You can do it. The ones for this week are $69, all right? The ones for next week, ending 7/31, are $98. So one call will cost you $9,800. Hey, do it. But if it doesn't go there, you're going to lose a whole bunch. Technically, the stock wants to go here. Now, if they don't meet their gap numbers, gap profits, okay, that's the accounting standard, general accounting principles. If they don't meet their gap profits, I can assure you, you can buy the stock at 1,400. Easy, and I will. Now, you can do a spread. You can sell a call, buy a put. You can buy a call. You can buy a put. You can do all kinds of different things. But it's a heavy-duty, very heavy-duty, expensive premiums right now. But I'm still going to play it. It's Wednesday. Now, if technicals dictated everything, the stock at 1,800, no problem. Question is, how do you make money off that as it goes to 1,800? If you buy 10 shares, it's $16,430. If you buy 100 shares on a margin account, it's $160, $160,000, right? 100 shares. But if the 100 shares goes up to $100, hello, you just landed some coin, right? Technically, it's absolutely fine. Are you guys there?
Yes.
And that's it. Every single thing saying 1,800. Or bottom end of the support level, which I told you guys, 1,420. If it breaks 14, 1,309, all drawn out here. If if something really hits the fan and it's like the numbers are horrible, then obviously we're looking. You can basically Tesla will come down to 1,000. Can that happen? Sure, it can happen. I don't think it's going to happen. I think he's managed the numbers. Yeah, go ahead.
Yeah, just some game theory. Let's assume that they have $1 profit, so they're S&P 500 eligible. So that's great. I think that's going to happen personally. I don't think there's obviously like billions of dollars. The big boys have their money in this.
I'm sorry, I didn't hear you. Getting muffled again. Fix the
okay.
mic. Yeah, go ahead.
Okay, this is better. Okay. Yeah. So personally, I think the big boys, thinking about when they're going to exit, right? Do you agree with this? I think that once the S&P 500 includes them, which I think that will happen. They'll have $1 profit.
I agree. Yeah, go ahead. And
Yeah.
and they already are buying ahead of that. Just so you
Yeah.
members understand, Tesla might be added to the S&P 500, which is the 50 top major companies in the United States, based on what Tesla's market cap is and all that stuff, and the profits are important. Then in that
Yeah.
case, the stock can have another 200 to 300 points under the belt. Just so new members understand. Go ahead.
Yeah, and so that's a lot of passive investments. These mutual funds, these exchange
Yes.
traded funds, ETFs are going
Correct.
to own it.
Correct.
So do you see them like that's sort of almost like passing the bag in a sense, because now all these passive investments are buying it. Do you
Yeah.
see some kind of dump happening at that point? That's sort of what I'm thinking.
Yeah,
We've
well,
also got that
the
battery
dump
day.
the dump will happen because the hedge funds who don't give a crap about holding things, they're glorified day traders and weekly traders, they will be the one doing the dumping. However, that dump will be bought.
Yeah. And
Exactly.
we've got that battery day too in September. So that's a wild card as well. Yeah.
That is significant. The battery day on September, what date in September again? I forget. That is significant. Just so you guys understand, Tesla is not a car company. Okay, Tesla is a high-tech company, serious high-tech company. The cars are just a way of just them showcasing the thing. Their battery day is so critical because if they can show that their battery capacity and all those different things are significantly higher than what the world, because that's their biggest. What is the most expensive component? And don't answer, Paul. What is the most expensive? Excuse me, I had a hiccup. Expensive component of a Tesla. Somebody step up and tell me, please.
Yeah, battery maybe.
It's
The
battery.
battery.
Just like my electric bike.
There you go. Exactly. The battery. That's the most expensive thing. And if they can reduce the cost of that and increase the capacity of the battery, and on top of, and not only can they, then you can then you know I can drive from here to Wisconsin without I don't even have a Tesla. I don't even like Teslas. So basically, exactly. Their whole thing changes. So that's huge. But that's in September. We're talking about what's going to happen now. So
Yeah,
I
and
think,
Frank,
yeah, go ahead.
it's on September 15th. And then just the last thing too with the game theory about Tesla, we've got an opportunity for some good window dressing, I think, with the 31st being on the last day of the month. That's why
Yes.
the calls could be expensive for the last week in July because it might be bought up by the.
Yeah, but I'll tell you, the calls have been expensive for a while, and they still
Yeah.
move. That's the best part. The best call I ever made was when I told people to buy it at 3 and it went to $1.60, and then they went to God knows 300. I mean, that's like it goes one in the history books. But aside from that, that opportunity is gone right now. But
You did it twice, Frank. Frank, you did it twice this year.
I did it twice this year. Good. I should I should remember my own trades.
It
Yes,
was like a 1,000% profit both times.
I know. No, the second time was far bigger. Second time was like sick. So anyway, so those are like life-changing matters. So bottom line is that yes, technically we are in this this pattern. I forget the name. You might know the name, Paul. This is it's I forget the name.
You know the
This
one I'm looking at, the one that's really clear to me, if you look at a 2-hour chart, it's a clear bull flag.
Yeah, this one, I forget the name of this thing. I should know the name. Shit, I forgot. It's gonna come to me in a second. It's something box. Anyway, not the Darvas box. It is it's some sort of Gartley, like it's a mix of the Gartley or something. Anyway, the bottom line is 1800. It breaks 1800, gonzo, finished, 2000 plus. So if I look at the 2-hour charts, which I don't have the 2-hour, I have the 4-hour and the 1-hour. But even the 1-hour chart is telling me 1800. So everything technically is pointing towards 1800, but hey, it's still a game. We don't know. All right. So aside from that, guys, let me wrap up. I'm going to be active tomorrow. Let's just do what we need to do. This is another company I like a lot. Made money on it. Some of you have made money on it. Is AYX Alteryx. Nobody talks about it. This is a serious cloud player on the biotech side, and I think the stock is going to go. It's it went all the way to 185 from when we were buying, all the way down here, the 140, 160 range. Right now, it's bouncing off, standard bounce off. So I still think the stock can go to 200. Now, IBM had good numbers tonight. I just want to show this to you guys. I like this chart a lot. This to me is a swing investment. Options are dirt cheap. This is Nutanix. Kramer had I had the stock before Kramer bought the guy on, the real smart CEO of Nutanix. Nutanix is something called hybrid cloud computing. I'm actually reading up on it. I'm kind of a tech junkie, so I like learning new things. I don't have the brains to be like a Bill Gates, but hey, I like to learn a little bit, right? So that's the way it goes. So hybrid cloud mixture is the new hot thing. All right. So these guys are big in it. And Nutanix, looking at this beautiful chart here, slow mover, but beautiful chart, calls a dirt cheap, $1.50, $1.60, $1.40. This is a huge gap. That gap is 25.89 to 32. The Najarian brothers, the options guys, they mentioned that huge calls were being bought, supposedly in takeover stuff. Well, fine, that's extra juice on what I think is happening. I like this picture here. This is a nice cup and handle. And I believe if the stock can break up over 24, it's going to literally hit 30 to 32. Keep an eye on this thing. And with IBM actually producing, IBM has a new CEO. This Indian gentleman, I forget his name, but like whatever. Chinimi Remedi was the previous CEO, right? So anyway, so this guy delivered the goods. IBM is actually up after earnings. It's never happened. It happens once in a blue moon. IBM is actually up after earnings. The good stuff. So these guys, who knows? Somebody might be looking at them. Google, Google could be a buyer of this. Google's big into cloud. So keep an eye on this NTNX. All right, guys, I covered a lot of stuff. Thank you for attending. made my evening. Let's get more referrals. Let's get moving. And I have nothing to say. I'm as clueless as anybody else. I'm just trying to follow my charts, trying to make some sense of what's going on. Things do look pretty damn good. In some cases, it doesn't. That's why the coronavirus stocks are still moving higher. But let's pray for our country. Let's pray for people who are afflicted by this virus. And let's stay safe. And that's all I got to say. Thank you, guys. See you guys tomorrow. Good night.
Thank you, Frank.
Thank you.
Thank you.